Morning, everybody. Is everybody okay today? Thanks everyone for joining. I'm just going to share my screen and hopefully you'll all be able to see it. Okay. So thanks for joining us for the payroll update. Unfortunately, there isn't too much to really go through. So we're going to cover off the main changes, and then we're also going to have a recap of some of the other legislation that came in over the past sort of last year and the year before, which we just want to emphasize. Okay, so today the agenda is we're going to go through the new rates and thresholds that are coming in from April. We're going to have a look at the health and social care national insurance levy that's also being implemented in April, which I'm sure you're all well aware of. There's also the employers' national insurance holiday for veterans, which if any of you attended our session last year will be aware of, but there's just been some changes into the way that you would claim for that. There's the new Freeport's employers NIC relief that we'll look at. There's statutory sick pay for COVID, which again, a lot of you will be aware that is coming to an end, but we're going to have a recap on that and just talk you through what you need to do to get them final claims in. The employment allowance, that again was just going to be a recap, but after Rishi's announcement yesterday, there are some changes to that. Holiday pay and how to calculate it. Again, this is something that had come in a couple of years back, but we're just going to have a recap to make sure that everybody's now doing that how it should be. And if you're not doing it as per the guidance, sort of talking you through what changes you can make to make sure you're complying. And then finally, something that's come up quite a lot recently is national minimum wage. So HMRC are cracking down on national minimum wage compliance. It's all been in the news recently about P&O cruises who have sort of taken on workers and paying them less than sort of £2 an hour. There are them cases, but we're going to also look at other incidents with surrounding national minimum wage that aren't just a sort of clear cut as paying somebody under the set rates. So again, not much on the agenda this morning. So I shouldn't take up too much of your morning, then you can get back to sitting in the garden or working from home or whatever you're doing today. Okay, so first of all, it's the tax bandings. So again, nothing's changed from what you had in 21-22. The personal allowances remain the same at 1257L. The basic rate stayed the same, higher rate and additional rate. But this is in line with what the Chancellor announced last year, where they said they were going to freeze it for 4 years. So we were fully expecting this. But again, that's just that they're going to be the rates. So in terms of calculating tax, you shouldn't see any difference. I haven't included it in the slides, but Rishi did announce yesterday that by the end of the Parliament, which is 2024, the basic rate of tax is going to be decreased by 1 point from 20% to 19%. Not particularly relevant for this next year, but it's just something that we'll need to keep an eye out in the next couple of years. National insurance threshold. So I had to quickly change this yesterday after he'd announced that at lunchtime that they were going to change the primary threshold. So we'll look at what it was for this year, what it was going to change to and what it is changing to from the 6th of April to 5th of July. And then we'll also look at what it's changing to from the 6th of July and what impact that might have. So this year, the LEL, which is the amount at which an employee earns sort of credit for the state pension, is entitled to sort of statutory payments such as SSP, SMP. That was 6240. That was due to increase and is increasing for April to 6396. The primary threshold was going up 300 points to 9880. The secondary threshold, so that's when the employer starts to pay national insurance, again increasing by 300 points to 9100. And the upper earnings level, that was remaining the same. Again, that was announced that they were going to freeze that for a few years as well. So again, that was to be expected. So from the changes that Ian announced yesterday, the lower earnings level, the secondary threshold, so the rate which the employer pays national insurance, and also the upper earnings level have remained the exact same. But what he said is from the 6th of July, the primary threshold is increasing in line with the personal tax allowance to 12,570. So what that will mean is for April, May and June, the rate will be at the 9880. And then from the July, so if you process on a monthly payroll, if you're processing in July, that's when your rate will change to 12,570. One thing that I haven't seen any announcements on, so we'll have to wait further details, is how this will affect directors. So for directors whose NI is calculated on an annual basis, what allowance they'll use, whether they'll use the 9,880 for the full year or the 12,570 for the full year. They have announced that for self-employed, where you've got the lower profits level, they are going to annualize the allowance. So then it's capped at, for the year, it'll be £11,908 for the year. So that's how we probably anticipate it's gonna be working. It's that they're going to annualize it, but they haven't officially announced that. So again, it's just that's just speculation for the time being. But it would make sense if that's how they're doing it for self-employed. That's how they would probably do it for the directors. In total, what that will mean is for the year, it's going to be a saving for employees of around £320 in the year, and that's just calculated based on the 12% of the difference between the 12,570 and the 9,880. So everyone's going to be getting an extra £300 in their wage packets this year than they expected. National minimum wage. So we've got, last year was when they decreased the higher rate from 25 to 23 and over. That went to £8.91. That's increasing by 6.62% to £9.50. So it's quite a big jump. 21 to 22 has gone from £8.36 to £9.18. That's a 9.81% increase. 18 to 20 is 6.56 to 6.83. Under 18s and apprentices, what they've done is they've married them up now, so it's the same rate. It's £4.81. So you see there the biggest increases are the apprentice rate, which they've brought up by 11.86%, and the 21 to 22, which is 9.81%. The reason that the 21 to 22 rate has increased so much is because the government has promised that they're going to, by the end of the Parliament, they're going to bring the 21 to 22 in line with 23 and over. So they're sort of reducing the age at which you're getting that higher living wage. So you would anticipate sort of next year perhaps it would get even closer, or it will be the same. So that's why we've seen such a big jump this time around. Okay, so student loan types, again, not too many changes here. The rate at which you pay student loan is the same. It's 9% for Plan 1, 2 and 4, and for postgraduate it's 6. The thresholds have increased slightly for Plans 1 and 4, from 19,895 to 21,995 and 25 to 25,375. Postgraduate and Plan 2 have remained the same. So statutory payment rates. So any parental statutory payments, so your maternity, adoption, parental pay, bereavement leave, and leave and pay, they're going to come into effect from the 3rd of April. SSP will be the 6th of April. So just be aware, if you like me and when you come to do that first payroll run, you like to just make sure that the right rate of SSP and right rate of SMP is being paid. That's when they go up. So anything parental goes up on the 3rd of April and SSP goes up on the 6th of April. So again, just slight changes in the rates here. So for the parental leave, it's 90% of the average weekly earnings, or 156.66 per week. So for maternity, it's the first 6 weeks of the 90%, and the rest, if 156.66 is higher than the 90%, is less than 90%, you'll get paid that. If the 90% is less than the 156, you'll get paid that until the end of the maternity leave. Same with the adoption. Paternity is just the 156.66 or 90% if that's lesser. Same with parental leave and same with bereavement leave. And statutory sick pay is £99.35 per week. So the first major change that's coming in for this year is the health and social care. And it's the national insurance increase. So the reason this has been brought in is to fund the NHS and for social care. It did get met with quite a bit of criticism when they announced it initially. But due to sort of when they announced it, how they were going to was that they were going to increase the rates for national insurance. So, for example, if you're paying 12% national insurance, you would no longer pay 12%, you'd pay 13.25%. All the pay slips from April 2022, the government are expecting people to write on there to say 1.25% uplift for NICs to fund NHS health and social care. It's the first time, I mean, I've not been in payroll for that long in the grand scheme of things, but it's the first time I've known any government to request a political statement be put on the pay slips. But there you go, and they are asking that be the case. Most payroll systems are doing that automatically. But if Pierce don't process your payroll and you have your own software, it might just be worth picking up the phone to them or dropping them an email to make sure that is the case. Otherwise, you will have to put a manual note on the pay slip. So from next year, rather than there being an uplift to the national insurance, it will be shown as a separate line. So you'll still pay 12% national insurance, and then you'll see an extra line with of 1.25. We imagine the rates will be the same as the national insurance, as that would fall in line with this year. But again, nothing's been announced on that, but that's how we'd expect it to look. April 23 levies shown separate on the payslip, and it will also be, so at the minute for this year, because it's being added onto the national insurance, if you're a category C employee, so you're above state pension age, and so ordinarily wouldn't pay national insurance, this won't affect you this year. However, from next year, because it will be shown separately, you will have to pay the 1.25% levy, but no national insurance. And here we go, this is just a breakdown of exactly how it will look in terms of what rates you'll pay. So for last year, it was 12% and 2%, depending on your earnings, and 13.8% employer. This year, it's 13.25% or 3.25%, and the employer's 15.05%. And then next year, it's going back to 12 and 2 and 13.8, with the health and social care levy coming in at 1.25 for each employee and employer. If you're earning below, if you've got an employee who earns below £35,000 in the year, you are actually better off by having the increase in national insurance threshold with this coming in as well, which sort of begs the question why they continued with the health and social care levy when it all goes into the same pot anyway. But I think it was more of a political point and didn't want to be seen to be going back on their plans. But I'm sure everyone has their opinion on that. Employees NIC holiday for veterans. So again, this is, as I mentioned at the beginning, this is something that did get brought in last year. But when it first got announced, there wasn't a way to get the relief through payroll, and you had to make a separate claim. So if you did take on a veteran and they were working for you, you could get your relief, but you'd have to do it away from payroll and you'd have to make a separate claim. So how many people have done that? I'm not sure how many people have got it in their minds to make that claim. I'm not sure. But from April 22, there's going to be a new NI category for letter V. And that's what you would apply to any employees who are veterans, who are starting a new job. And this is their first job since leaving the armed forces. You can put them on letter V, and then you'll get that employer's relief. So just to go through the rules of this and who would qualify. So it's anyone who served a day in the armed forces, whether that be just basic training, and has then left, and this is then their first employment since leaving the armed forces. So if they've got another job, left that job, and then come to you, you wouldn't then be entitled to this. They have to have come straight out of the armed force, and this be their first job. So it could be that they've been unemployed for 2 or 3 years. If they've not had another job, that's fine. You can still claim it. It is the employer's responsibility for checking and maintaining records. So you need to make sure that they are qualifying veterans. So like I say, that they've not had another job, and that this is the start date of the veteran's first civilian employment. So you just need to make sure of that. And the relief lasts for 12 months, 12 consecutive months from the first day. So it isn't based on tax years, it's based on true sort of calendar months from when they start. So if they start in June 22, you'll be able to claim that relief until May 23. So record keepers, so things that you just need to keep keep an eye on and make sure that you've got on your files. If you've got a veteran ID card that can prove that they were in the armed forces, you can either have an employment letter of employment or contract from HM Armed Forces, the P45 that they were given when they left, any discharge papers, an employment contract from individuals for previous employment, and that's in order to determine the start date. And you'll need to keep that for at least 3 years until the end of the tax year, which they relate. So you need to make sure you've got them, just in case you were to ever have a pay-as-you-earn review and they were to ask why you've claimed relief. You can then provide that that backup to prove that they are a veteran and that you are claiming the correct relief. Next point is the Freeport's Employers NIC relief. This is part of the government's Levelling Up plan, and it's to try and boost the economy in some of the more deprived communities within the UK. So they've created these Freeport tax sites where, as well as other tax relief, you'll be able to get tax relief on employers' Class 1 national insurance. And that's for any new employees that spend at least 60% of the time working in that tax site. This rate applies for any new hires from 6th of April this year to the 5th of April 26. There is talk that could be extended, but for now it's just till 26, and the exemption applies for earnings up to £25,000 per annum, and that's per employee. Eligibility to claim will expire 36 months after the employee's start date. So you can claim for up to 36 months from the employee's starting with you. There are going to be 4 new national insurance categories that you'll probably see on your payroll system. Whether these are relevant for you, it will depend on whether you are in that Freeport site. So F is the standard category letter. So that in effect is what you would use category A for. So it's just your standard employee. I is a married woman and widows entitled to pay reduced NICs. So if you've got anyone on category B, but they're now working in Freeport, you'd use category I. Employees over state pension age, again, that's usually C, but you would use S. And employees who can usually defer paying 12% NIC and pay only 2% because they're already paying 12% in another job, you would, rather than using letter J, you would use letter L. So areas where there are Freeports, so there's East Midlands Airport, Felixstowe and Horwich, Humber, Liverpool City, Plymouth and South Devon, Solent, River Thames and Teesside. So they're a few of the ones. So they're only in England at the minute, but they are looking to expand that. So statutory sick pay for COVID-19. I'm sure probably everybody's claimed this back at some point. So again, I'll go through the rules and we'll go through what you need to do to reclaim that back. So employees were able to reclaim back 2 weeks worth of statutory sick pay for employees who are off for COVID. That did stop at the end of last year, but then they reinstated it again when cases started to go through the roof. They did say that any employees that had previously been claimed for, you could now claim again, and that's capped at 2 weeks per employee. So if you had already claimed 2 weeks for them, and then they went back off sick, you weren't able to claim for it again. But when the new scheme sort of was reintroduced, you could claim for them again. But again, it was still now capped at 2 weeks. You can only make claims for employees who are off work after the 21st of December, on or after the 21st of December. And that scheme actually closed on the 17th of March. So you can no longer claim for sick days after the 17th of March. And today is actually the deadline to get them claims in. So if you haven't got them claims in already, make sure you do that today, because if you don't get them in today, you'll have missed the boat. So just have a look back at all your sickness records to make sure that anyone you can claim for, you have claimed. Okay, employment allowance. So this is something, again, not new to anybody. It's been in place for a number of years. It coincided with when they got rid of the SSP claims for all sickness. So following Rishi Sunak's announcement yesterday, it's increased from £4,000 to £5,000, which you can use to offset against your employer's Class 1 NIC. If you're a business with Class 1 employers NIC of over £100,000 in the year, so in the previous year, you're not eligible to claim this. And that counts if you're part of a group. You need to add up all the employers NIC across the group And if that's over £100,000, you then wouldn't be able to reclaim this. Employment allowance, it does fall within de minimis state aid rules. So if you are claiming any de minimis state aid, which statutory sick pay for COVID does actually class for that, if you are over the threshold, which over a 3-year rolling period is around €200,000, then you wouldn't be, if the £5,000 was to take you above that, you wouldn't then be able to claim for it. To be honest, we've not found, or we've not spoken to many businesses at all who have exceeded that. So it's probably not likely that you have. And if you are, then you'll know whether you are claiming that or not. But if you're unsure, come and have a word with us. If you do want to claim the £5,000, which if you're eligible, you should be doing, you'll have to submit a declaration by a payroll on an EPS. So previously what you did is you'd submit one EPS and that would roll over until you were just not eligible anymore, and then you'd have to send another one to stop it. Since last year, you have to submit that on an annual basis. So we've had quite a few clients who have missed sending that EPS just thinking it's going to roll forward. Try to remember in April to make sure that you're ticking that box wherever that is in your system. If you're not sure where you can find that, give me a call, and we can try and locate it together. And then make sure you're submitting that EPS to get that £5,000 relief. So what do you need to do? You just need to make sure that your employer's class 1 NIC isn't exceeding £100,000 across all companies in the group. Calculate your total de minimis state aid claimed for the previous 2 years, and also submit your EPS via payroll software. So holiday pay. Again, like I said, this is something that's been in for a few years now. I'm just going to emphasize it because it is still a conversation that we're having on a regular basis with employers, and people are still trying to figure out how best to tackle this. So I thought I'd go through the rules. And again, if you've got any questions about this afterwards, either put them in the comments for the Q&A afterwards, or drop me an email, give me a call. So the previous rules were that everybody was entitled to 5.6 weeks statutory leave, and that includes bank holidays. For employees on shift work or no fixed hours, an average from the previous 12 weeks should be used. And if regular payments such as overtime, commission, bonuses were paid, then these also should be included in the calculation. So what's changed? So in 2017, the Independent Taylor Review of Modern Working Practice recommended that rather than looking at a 12-week period, you look at a 52-week period. The reason for that is because different businesses have different peaks and troughs. If somebody's then taken a holiday over, say, just in January, and they've just gone through the full sort of Christmas period, their average earnings might be higher than if they try to take it in the summer and it's looking at a quieter period in the year. So by doing a 52-week period, it gives everyone a sort of an average then over the full year, and you'll get all them ups and downs. So yeah, it better reflects the hours worked, and it actually stops employers from encouraging workers to take holidays, before it gets busy, and after them quieter periods where their average hours will be much less. And that was accepted by the government, and it was effective from April 2020. So like I say, this is 2 years now where it's been in place. So we should all be doing it, but I appreciate it's probably not been top of everyone's agendas over the past 2 years. So what should you do? So similar to the current 12-week rule, you just need to extend that to 52 weeks. If you've got some workers who haven't worked a full 52 weeks because they might work 1 week and off the other because they're sort of bank staff, you can go back up to 104 weeks, up to 2 years worth of earnings to get them averages. How easy that is and how realistic that is, it's really difficult, depending on the systems and software that you're using. Most payroll softwares that we've come across don't really have this functionality, and so it requires an Excel spreadsheet to the side to sort of work alongside it. And HR systems similarly just aren't touching it. I think payroll softwares are saying it should fall within HR, and HR saying it's payroll. And until both of them get their heads together and sort something, it's going to be a lot of manual work for employers, which again is just another headache that could really do without. If there's fewer than 52 weeks of pay information, then you just use the number of weeks that you've got available. So if there's only 20 weeks, you just average it out over 20 weeks. And again, in here, if you do pay overtime, commissions, things like that, you should be using that as part of your holiday calculation, because an employee shouldn't be worse off for taking holiday than if they were working. As I said, we're going to look at national minimum wage, only because this is since the pandemic. HMRC have pumped a lot of money into new compliance work, and this is an area where people are getting quite a few reviews in, and being found out for things that just they weren't necessarily sure, and it's more a technical aspect rather than, like I say, physically paying somebody less than £8.91 an hour. So I want to just go through the common pitfalls. If you think any of these apply to you, come and have a conversation with me afterwards. But I could spend sort of half a day talking about this and all the different implications. So I'm going to try and keep it quite brief. So it is the employer's duty to make sure that employees are receiving at least the minimum wage. And as you've probably all seen, if you do fail to pay the minimum wage and you get a review and HMRC determine that you've underpaid, then you do run the risk of not only getting a fine, which can be up to 200% of the underpayment, capped at £20,000 per employee. You will, or you could get name and shamed, which I'm sure you've all seen plastered around, which I do think is a very unfair system, because having looked at some of the cases where they've been named shamed, you do have your car washes who are paying £2 an hour, and they are clearly paying below minimum wage. But the majority of cases is this technical stuff that you have to dig so far deep into HMRC guidance that most people wouldn't be aware of until they had these reviews. So I think there does need to be a change of tack, that the national minimum wage, unless there's been a clear, deliberate underpaying of minimum wage, it should be more of an education process. And fine, have a penalty, have a fine, and have to repay it back. But the naming and shaming, to try and sort of completely ruin a business's reputation just because of an underpayment of minimum wage that is just a genuine didn't know the guidance, then I think is very harsh. But that's just my view on it. So one of the common areas is making wage deductions or taking payments from workers for the employer's own benefit. So an example of this is if you are a care home and have uniforms, if you take the uniform cost out of an employee's wage, that will take them to below minimum wage. So that would reduce their payment. So even though it's a net deduction, it doesn't matter. What you'd have to do is you'd look at the gross wage, you'd take off the net deduction, and then you'd look at the hours worked in that period. And if that rate was then below minimum wage, you would be found to be underpaying the employee. Salary sacrifice deductions. So if you've got any salary sacrifice scheme in place, so whether that be pensions, childcare vouchers, cycle to work, if you've got somebody who's on minimum wage, you shouldn't be enrolling them into that scheme. If you've got somebody on the cusp, you might just need to go back and have a look to make sure that salary sacrifice deduction doesn't reduce their gross line to below the minimum wage. Fail to pay a worker for any travelling time. So best example of this is if you've got somebody who's salaried, works 9 till 5, but they're going out to see a client and that client's based 3 hours away, and so is planning on having a meeting with them at 9 in the morning. So we're setting off at 6. That they're technically starting work at 6 o'clock in the morning. And so between 6 and 9, where they might not be getting paid through their salary, they class as hours worked. So if the revenue were to come in and have a look at that, they would say, well, in that day, although they're contracted, they've been paid for 8 hours, they've actually worked 11. So over the course of the month, they may well have been underpaid for minimum wage. So again, just something that you need to consider. Failure to pay a worker for any time during the shift when they're at the workplace and expected to be available for work. Again, best example of this is some companies might have a policy in place that say your shift starts at 9 o'clock, but we expect you on the premises at 8:45, ready for work. So then you can start your shift bang on 9. If that's in your contract, then that means that you should really be paying for that 15 minutes. If it's for minimum wage purposes, if you don't want to be found out for minimum wage, best case would be to not include that in your contracts and say your shift starts at 9 and they need to be there for 9. But by having that in the contract, that sort of states that really they're on site, they should be ready for work, and therefore they should be getting paid. Failure to pay a worker for any time spent training. So if you've got somebody who's new and you think you're going to sort of put them through so a bit of on-the-job training, but you don't know whether they're going to start and they're on a trial period, so you're going to pay them sort of £5 an hour just to see how they get on, because they're not really doing they're not doing the work, they're just sort of overseeing somebody else, then that still needs to be paid at minimum wage. In the same breath, if you've got somebody who's going away and doing some training outside work, but it's required for their job, so they're going on a training course and it's either in the evening or during the day or on a weekend, that needs to be included, because they're expected to go there. They have to complete that training for their job, and therefore they should be paid for it. The obvious one is failure to apply the annual increase to minimum wage rates. So you continue to pay somebody £8.91 in April rather than the £9.50. And then failure to pay sufficient time for any time worked during a sleeping shift. So there was some rules on this where people were arguing that you should be paying the minimum wage for whilst you're sleeping, even if you've not been woken to do some to be on shift. So, for example, care home, if you've got somebody who needs to be on site, but needs to be available should they be required. The argument was that you need to pay minimum wage for while they were sleeping, but that did get thrown out. And as long as you're paying for the hours that they are actually working, so once they're awake and they're working, they then need to be paid minimum wage at that point. But most companies will just pay a sort of a set rate for the sleeping. And that is the national minimum wage. Like I say, there's quite a lot that we could go into there, and there's a load of different scenarios. I've come through the main ones that we find to be the most common. But if there's anything on there that you're unsure of, or you think that you may well have, you may be sort of underpaying for minimum wage yourself, and you just want to sort of talk it through with somebody, give me a call after this presentation, and we can have a look at that scenario. But was there anything, any other questions based on what we've gone through today? No. Well, like I say, if anything, we are recording this so we can circulate around, so then you've got a copy of it. But if anything does crop up or you do have a question that you want to pick up with me separately, feel free to drop me an email or give me a call. But thanks for everyone for attending, and yeah, hopefully hope you have a nice weekend. Cheers.